Good everyone, Les here, Chief Analyst from BG Trading Australia, and I hope you are well. Today we're going to be analyzing DRONESHIELD, which the SX code is DRO. This is a stock that has doubled in value over the last few months, and we have a lot of our VIP members and some members of this Facebook community, Buy, Grow, Sell Strategy for Share Traders, asking our thoughts on that particular stock. Yes, every once in a while we post the opportunity for people to ask stocks they think could have a further upside or have potential for 20 to 40% profit within 1 to 3 month time. That's what we do here at BG Trading. So DRONESHIELD is a stock that we have analyzed back in March, and we thought it was a good opportunity. Every time we see a stock that has upside potential, we bring to our stock analysis library that only our VIP members have access to, and then obviously we explain the reasons why we think the company is offering potential value at the current prices, and that was in March 2024, 26th of March. That's when we put this analysis together. So obviously, from the fundamental aspect, so FY, if you look at all the financial years from 2022, 2023, so we see a huge improvement quarter by quarter, which means the company has not only has been increasing its revenue remarkably, but also from being a net loss company has become a net profit company in 2023. With new contracts coming on board, and I want to be very clear here, when we put this analysis, we didn't have the last 3 contracts, which was first announced in April. NATO agreement was signed for 3 years procurement, and that was huge. They obviously boosted the share price. And then in May, there was another award agreement to DRONESHIELD, which was by US government contract, $5.7 million. Doesn't look a lot in the context, but if you look at the company's overall revenue, it's kind of 10% in one single agreement. So it's pretty big, pretty compelling agreement for the size of DRONESHIELD at the time, right? And then there's a new one in June, which is $4.7 million. So those two combined, only those two, it's pretty much 20% of the last year's revenue, which is potentially coming to FY20, like calendar year of 2025. That's what they say here on those announcements. And we're going to see the financial result coming through this upcoming financial year and potential FY25 as well. And that's why I think the market has been so bullish about this particular stock, because they keep pouring new award agreements for their services, for the equipment, which is fantastic if you are holding the stock. Now, the question that a lot of people are asking me based on the chart formation, would I buy the stock now? Look, this is a very tricky question, but I normally don't fall into stocks, okay? The entry was at 70 cents. So we had the target of $1 at the time. We didn't know, obviously, those 3 contracts would come online. So then we post the exit opportunity of 30% at $1, but then the stock has doubled ever since. So it will be a 3 times profit. So we can only guess whether the company will be pouring. But provided that they had these 3 contracts, if you think there will be more contracts coming up within the next few months, then this is definitely a stock that you should be buying. You can't make the judgment on companies like that only by looking to the technical aspect, not by technical analysis. By technical analysis, this is stock trading at the formal level. You never would be buying right here. I would wait for a pullback, at least for this short-term moving average, and then buy or add more. If you believe there will be more contracts coming in place in the future, okay? The problem in companies like this is if there's no contracts coming in place in the same pace, so we have like an interval of this is April, then May, so pretty much every month, and then June, pretty much every month, one contract a month. That's how it has doubled the value of this particular stock. Now, in order to keep momentum, okay, so first of all, we need to have a really compelling FY24 financial result, which I think will be in terms of revenue. I'm not 100% sure about the net profitability because a little while ago the company has raised capital, which is positive, okay? And then obviously it's going to be spending a lot of, investing a lot of money to be able to manufacture its equipment, its war equipment. Here's some example of what they do. Many different sort of drones and for wars. So essentially, obviously with two wars, ongoing wars in Ukraine, in Russia and Ukraine, and then in Middle East. So it's sensible to say that those stocks are still offering further potential, but I want to be clear on this. If a war finishes, that could impact negatively the market sentiment. That's the risk at the moment. So to summarize this, it's no doubt the stock is trading at the formal area, so I wouldn't be buying now. But if I was holding, I would certainly be holding. I wouldn't be selling either. So until obviously we see a clear reversal, which we haven't seen. We saw a little bit of reversal here, but as you can see, the candles remained above the yellow line, which is exactly what BG trading strategy would say, to hold as long as the candles trade above the yellow line. So at the moment, just keep holding as long as those candles trade above the yellow line. If eventually it falls, there won't fall, like you're not going to lose all the profit, especially if you enter into early stage. And alternatively, remember, this is if it was a stock market that didn't have short trading activity, I would be very comfortable of holding for the long term. But the problem is short trading activity is allowed on the stock market, unfortunately, and that's when things companies with a really strong and compelling fundamental value start having its share price decline, because institutional investors start short trading the stock, betting on the fall. And it's very classic. I've seen so many high quality companies being short traded, especially when they go really high. So overall, the stock could go, as long as they keep putting a new contract every month, they could keep going, like could go $5, $10, who knows. But if they stop putting contracts in, this is where the risk is. If they stop putting contracts, then I doubt that this rally will continue. Okay? So the risk is really related to whether the company will have the ability to keep putting new contracts, increasing its revenue in this sort of pace, and therefore increase its net profitability. Okay? For me, it's a hold, but not a buy until we see the stock bouncing back under this short period average right here, the red line there. Okay, hope this was valuable, and let us know what you think about DRONESHIELD. Obviously, it's not a company that you should just buy and keep holding. You need to understand why they are pouring contracts, and is their ability to put more contracts in? If yes, okay, hold it. If you believe that, yes, keep holding. If not, obviously, yes, sooner or later the share price will start fall. And then when it starts to fall, then that's when then investors start losing the confidence, and then we start seeing some potential short trading activity. I'll see you in the next video. Bye.